Hey, this is Danielle, and today I'm going to talk about a long-term setup in Amazon. If you look at Amazon, you'll see that it's been, kind of choppy, kind of back and forth, traded lower before earnings, traded higher after earnings, traded lower again, then we traded higher, and we're just sitting right on top of the 50 simple. Now, why do I like it here? Well, I love stocks that are sitting on top of the 50 simple, especially if they are in an overall long-term bullish trend. But most importantly, I like stocks that have squeezes. So you can see that there's a squeeze right here on the daily chart. Also using the multi-time frame squeeze, you can see that there's a 2-day squeeze, a 3-day squeeze, a 4-day squeeze, and a weekly squeeze. So those will generally pop up when you can see on the daily chart that the stock is just incredibly back and forth. And so it's just typically one of those signals that I'll use either to buy long-term stocks, um, or I'll just, use it for a longer term swing trade. If you go to the weekly chart, you'll see that there's been a couple different weekly squeezes lately in Amazon. This one right here was absolutely phenomenal. This one right here is absolutely phenomenal. This one was a bear squeeze, but that was when the whole market was trading lower. So, I'll give it a break for those bearish squeezes because right now we're in an uptrend and the squeeze normally fires in the direction of the trend. So, what would the upside target be? Well, I've just been dollar cost averaging into shares and continuing to hold. I've been looking for a price target up here at 220. But on a shorter term basis in the options market for any kind of butterfly or anything like that, you just want to look at the time frame that you're using. And then you'd want to kind of overlap the price target with the time frame. So for example, you're trading at 184 right now. The next upside target is going to be 190, 195, 200, 205. People always say, well, you're just counting by fives. Well, yeah, because in the options market, you need to use key psychological values in trades like spreads or butterflies, because that is where the volume and open interest is. And that is how you're going to be able to use a strategy like a butterfly and have it work. So if you just focus on the overall 1272 extension, that's going to be at 195. It's also $10 higher, $11 higher. So you have plenty of room to, make a successful trade and just have enough space for that to happen. Now, you could use the lower price target, which would be 190. This is what I call the easy target. That's because that is the resistance target. When you have resistance, it's a lot easier to hit previous resistance than it is to hit a new high. So that's why I use that price target. And then this would be basically, the to the moon kind of target. So any of these targets can be used. It just depends what kind of trader you are. A lot of the time I use this one because it's easier. And then I'll have another one up higher. And then this would be, only if the other two broke. So if you look at the options market and say, okay, well, when would you use these price targets? Well, because of all the higher time frame squeezes, it can be back and forth for a little while. So you can try to trade it with just 4 days, but I don't usually do that unless we have, like a 30, 78-minute squeeze and the stock's already moving. So if you're going out a little bit farther and saying, okay, why don't we just give ourselves a little bit of time for that squeeze to fire? Let's look for $10 of upside, the 1272. That will bring you out into July. July 19th, you have $11.50 expected move. If you scroll down in your options chain, you will see that there's a couple different spots in here where you have some high open interest. So where is that high open interest? Well, we have a lot of high open interest here at the $200 strike. Let's see, we actually have quite a bit of open interest at 190 and 185. So what's interesting is that the strike that I originally picked doesn't have the sticky point, doesn't have the open interest. So that would actually force me to adjust my price target, because I usually want to place a butterfly with a sticky point target. So I would actually just give it a little bit more room to the upside, which would be 200 at that point. So the other thing you want to check is earnings. You don't want to be buying a butterfly the same week of earnings. It's probably going to be a little bit too early to see now. Looks like they're not projecting it until the 1st of August. So you should be fine using this series. But basically what you could do is you could just do butterfly. You could do 185, 200, 215. Do something like that. It's only $3.40. It's $15 wide on your butterfly. You have a fantastic risk to reward right here. So I think that looks pretty dang good for a trade on Amazon in the daily squeeze out into July. If you have any more questions, let me know. You can also follow me on X, and you can follow me on YouTube as well. You can find me at Trader Danielle. If you check out my channel, this is what it looks like. Beware of the scammers. Make sure you spell my name right, because people are pretending to be me all the time. Anyways, hope you have a great rest of your day, and I'll see you in the next video.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.